Texas Pacific Land Corporation caught my eye when I stumbled upon information showing that insiders had made 759 buy transactions in the past 6 months, which is over 4 transactions a day. This got me curious and I wanted to know more about this company. I learned that it was established in 1888 and was initially created to manage the sale and distribution of land from railroad to settlers in Texas. Today, Texas Pacific Land Corporation operates mainly as a land management company and is one of the largest private landowners in Texas. I also discovered that almost all of these 759 insider buys were made by one person. Murray Stahl is the CEO and CIO of Horizon Kinetics. Stahl has over 30 years of investing experience and manages over $6 billion. Murray Stahl was on board of directors of Texas Pacific Land Corporation because his company, Horizon Kinetics, owned a substantial part of it. So here we have a very experienced investor that is putting his own money into a company that he knows inside and out. I think it is worth looking into. So first, let's take a quick look at the ownership structure. Individual insiders. That is an X with 0.1% of the company owned by individual insiders. And we would like to see this number over 2%. But what is interesting in this company is not the fact that insiders own a lot of shares, but that they are buying them right now. Because that is a massive check. Murray Stahl is buying shares worth $500,000 every quarter. And right now, his shares are worth around $6.8 million. And looking at what prices he was buying previously, it is possible that he will continue to buy. And do super investors own this company? That is a check. There is only one super investor that owns Texas Pacific Land Corporation, and that is David Rolfe. And are super investors buying right now? That is an X. In the last quarter of 2022, Thomas Geithner sold all of his shares in this company. And how is the financial health of Texas Pacific Land Corporation looking? Return on invested capital. That is a check, and it is an incredible 114% 10-year median return. And we want to see this number higher than 10%, so that is just incredible. But this company is very specific in a number of ways. They only manage land, so they do not have to invest a lot, and their expenses are also very low. Okay, and free cash flow growth? That is also a check at 26.5%. So a really nice 10-year compound annual growth rate. So this is a very interesting beginning. Now let's take a look at net profit margin. It is another check at 64.3%. This is incredible, and if we look at the sector median, it is even more surprising. The sector median is just 13.3%, and the closest competitor has a net profit margin of 48.5%. That is really nice. And now let's take a look at shares buyback. It is a check with minus 13.4% change in the number of shares in the last 10 years. So that is also very nice. And the debt? It is a check. Texas Pacific Land Corporation has no debt. And they have almost $500 million in cash. So not a bad financial situation to be in. Okay, so it all looks really nice. Now let's see if they pay any dividends. It is a check. The dividend yield is 0.6%, so the annual payout is $12 per share. And the payout ratio? That is an X at 57.7%. And we want to see the payout ratio somewhere between 20 and 50%. But the reason for that is a special dividend that this company paid last year. Without it, the payout ratio would be just over 20%. So in the case of this company, it is almost impossible to predict what the future dividend will be. And what about dividend growth? It is a check with another incredible result of 102% 5-year growth rate. But again, this includes the special dividend that may not be paid in the future. Okay, so now let's value this company using a discounted cash flow formula. PE is over 34, so I would not assume that it will be cheap. We will have to estimate the growth of Texas Pacific Land Corporation for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 15% for the first 5 years and then 12%. In the medium, 20% for the first 5 years and then 15%. And in the high scenario, 25% and then 20%. And even though these numbers may look high, we have to remember that the last 10-year compound annual growth rate for revenue was 29%, assets 39%, free cash flow 26%, and earnings per share 32%. So these estimates may actually be conservative. And with such estimates, the intrinsic value in the low scenario is $1,544, in the medium $2,057, and in the high one $2,918. But of course, we have to always add a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $1,081, in the medium $1,440, and in the high scenario $2,042. And the current price is around $1,923. So we get the high scenario in the green, but the low and medium are in the red. So it may be a case of this company being actually fairly priced at the moment. So it seems that we have a company that has some great financial fundamentals, that is paying a decent dividend, and that is fairly priced. Or maybe I'm missing something. Let me know in the comments. This analysis will of course be added to our stock ranking, to which you can gain access on our Patreon page. And if you want to see the analysis of lows, then click here. But if you are more interested in index funds, then click here. Thanks for watching and bye-bye.